Now let's come into the main content. What do we have to learn? See, chapter 2. Chapter 2 talks about concepts of strategy. So, concepts of strategy, we see strategic planning. Then we would be learning about the JSW approach, which is Johnson, Scholes, and Whittington. And then what does it mean by strategic drift? So, these are the concepts which we will be looking into under chapter 2. So there is a diagram here given for what is strategic planning process. Strategic planning process. Every organization, whether it is a profit-seeking organization or not-for-profit organization, any type of an organization, see, when it is established, there is a basic purpose behind establishing that. See, some of them may be aiming at maximizing their profit. Now, of late, we do not see, so though they are profit-seeking organizations, profit alone is not their primary objective. There are multiple aspects, maybe to cater to the requirements of the customers, satisfying the customers, then becoming the market leader, see, certain other things, maintaining best relationship with different stakeholders. Those things are also along with the profit maximization for profit seeking organizations. See, some of them may have exclusively that concept of maximizing profit. Nevertheless, there is some purpose. See, ultimately we see that just like that, nobody starts an organization. Nobody starts a business. So if a business is started, then there is a purpose. So that purpose is given as mission. See, for not-for-profit organizations also, there is a mission. See, their mission, their purpose is to provide services to some stakeholders. Sometimes it's the society at large, or some groups in the society, or something. But in all situations, whether it is a profit-seeking organization or not-for-profit organization, there is a mission. Now, when there is when the organization is established, everybody in the organization aim to achieve the mission. So mission, it cannot be achieved in a very short period of time. In the current year, it may not be achieved. It will require a longer period of time. So focusing during this long period of time, focusing on the purpose to achieve that purpose, when everybody works towards that, ultimately it becomes possible to achieve the mission of the organization. So the focus of everybody in the organization is to achieve the mission. Mission has to be achieved. Okay. But that's a very long period of time. See, long period of time for a student also, let's say that for a student, if he joins in a particular program course, the objective is to become successful, achieve success in terms of, it could be depending on each student's definition of success. They may aim to become university topper, college topper, or some grade, achieving a particular grade. See, but if the program, let's say you are into BCom programs, if the program is for 3 years, then your mission is, your purpose is to get the degree certificate. But do you just wait till 3 years to happen, and then after, at the end of 3 years, then you realize that you have achieved or you have not achieved? See, it is a 3 years time duration for BCom program to be completed. So you just decide when you join, and then After 3 years, then you look back and then say, I have not achieved or I have achieved. Is it that simple? No, because it is at every given step you will have to achieve smaller task targets. So you will keep writing, the candidate keeps writing small test exams, term exams, final exams, etc. So there are various stages and steps at which smaller tasks are achieved. So that all these things will put them in the direction in which they have to move ahead, ultimately to achieve the overall objective of the organization. Okay, so in between, see the purpose to achieve that, there should be objectives, tasks, targets that have to be set. So when there are objectives that are decided, okay, how can they decide? How can they set the objectives? So the objectives have to be set so that the people in the organization can achieve these objectives. Would it be randomly deciding on the objectives? No, it would not be about randomly deciding the objectives, but the objectives that are set to be achieved are based on three different types of analysis. One is internal analysis, second one is external analysis, third one is stakeholder analysis. So internal analysis, external analysis can be taken up by you all must be aware of this one. There is an analysis called as SWOT analysis. S and W talk about the strengths and weaknesses of the organization. So together S and W are internal aspects. So for an internal appraisal or internal analysis to be taken up, it has to be focused on what are the strengths and weaknesses of the organization. So these are internal aspects. Opportunities and threats help help the organization to understand the external environment and take up an external appraisal. The third one is stakeholder appraisal. Who's a stakeholder? So if we ask that question about who's a stakeholder, stakeholder is someone. It could be the stakeholder could be an individual or a group whose interest lies with the organization. So they have vested their interest in the organization. So stakeholder is an individual or a group whose interest lies with the organization. Okay. So there are three different types of analysis. There are three different types of analysis. One is the internal analysis. Internal analysis is possible when they focus on the strengths and weaknesses. Strengths could be maybe they have sufficient amount of capital. There are a sufficient number of people in the organization. They have required skills. They're qualified. They can take up any kind of a task individually, in a group, perform well. See, people could be their asset. Good management could be their strength. See, all what they have already acquired for themselves for the work to be carried out, they are very good with those things. So we look at them as strengths. If they are very good, they're better than others, so it's a strength. So those aspects only in some of the organizations could be weaknesses. Maybe they have shortage of capital. Funds are not sufficiently available. Management has weaknesses. So then we can look at the employees. Employees are not equipped with the required amount of skills, or training was not provided. Maybe they are morally, ethically, they are not sound, things like that. So internal environment has to be understood. See what is that they are good at internally, what are their plus points, what are they good at, what are they not good at. So That is about internal analysis. Strengths and weaknesses have to be looked at. Then comes opportunities and threats in the external environment. The external environment, how is the external environment? Are the opportunities present for them, or what are the threats which are present in the external environment? Opportunities like maybe demand is good, government has um, extended from time to time grants and subsidies, etc. Um, uh, there are good relationship with the other stakeholders, like suppliers are prompt in delivering the material. The customers, see, the relationship with the customers is very good, the demand is very good, etc. So competitors are not very aggressive in competing in the external environment. On the same note, we should also be looking at the threats. See, in some of the markets, the demand is quite volatile. It is not consistently the same. We can see volatility in the demand. Government may have withdrawn the subsidies or grants, or they very frequently bring about changes in the regulation. So that's again another threat whenever there is a change in regulation. See, maybe the relationship with other stakeholders are not very good, etc. So customers are too demanding, or that they are unpredictable, etc. So what are the threats that are present in the external environment? Take up a internal analysis, take up an external analysis, also understand what are the expectations of the stakeholders and how to cater to the requirements of the stakeholders also has to be taken up, which is called a stakeholder appraisal. Okay, so there are three different analyses that are taken up. Internal analysis, external analysis, and the stakeholder analysis. After that, see, now this is the basic purpose which has to be achieved. So basic purpose, we can put this one as the desired performance. Okay, or we can put it as a target which they want to achieve, desire or a target. Now this has to be achieved, the mission has to be achieved. The mission has to be achieved, but when these three different analyses are taken up, okay, after that, what is possible? See, looking at the strengths, weaknesses, looking at the external environment, looking at the expectations of the stakeholders, after that, it would be possible to estimate what is possible for them to achieve. So we call that to be as expected performance. Expected, predicted, forecasted, we can call these things. So there is a desire which they want to achieve. Then looking at various aspects, what is possible to achieve, expected performance or forecasted performance. Now expected performance, when it is compared with the targeted performance, okay, when there is a comparison, if both of them are on par, no issue. The aim is to maximize profit, but profit maximization is not such a simple task. It's not a possibility. They are not able to achieve that, or to become a number one company in the country, in the economy, is the objective, but it doesn't seem to happen when these three analyses are taken up. So if that is the case, if at all, if they do not match with each other, so the targeted performance and the expected performance, if they do not match with each other, then there is a gap between these two. This gap has to be closed. Okay, to close the gap, if at all, if there is a gap between these two, the gap, when it has to be closed, what are the strategic options that are present? Generate strategic options, the choices, the alternatives which are available with them. Among them, choose anything, any choice, choice of alternatives. Among them, choose one thing and plan and implement that. As implementation happens, wherever there is plan, wherever there is planning, control also has to happen. So planning and control go hand in hand. So we know that. So when there is a plan when it is implemented. So constantly how the implementation happens. So on monitoring, um, it would be identified whether there are any deviations, and then measures are taken to control those deviations, which you call them as exercising control. So you must be knowing this. This is very general. There are three different levels in the hierarchy of management. The first level is the strategic level, or we also call that as a corporate level. Then the middle level, which is called as business level, and then finally we have it as the functional level or the operational level. So at the strategic level, what is that they would be planning? The plans that take place at the strategic level is the strategic level is involved in planning for the entire organization in terms of what products or services they would produce, what are the markets where they would be present to sell their products and services. So that would be the focus about or the planning at the strategic level. So at the strategic level, the planning involves the entire organization about what products or services they would produce and where would they sell these products and services. At the middle level, the business level, they are more involved in um, taking up plans in a detailed manner. So how to achieve the plans at the strategic level, what kind of planning should be taken up in terms of assigning the work to in departments, divisions, individuals in the organization, how to utilize the resources that are available in a best possible manner. So that is the level of planning that takes place at the middle level. See, then these plans that are prepared at the middle level have to be implemented, which are implemented by the functional or the operational level. So their level of planning would be as they are implementing. So day-to-day planning, whatever is required, is taken up at the functional level. So just remember that. That's the whenever we have to use that, we will be able to just remember what kind of planning they are all involved with. See, this is called as JSW, Johnson, Scholes and Whittington model. So it talks about the strategic analysis, strategic choices, and the strategy put into action. So first step is strategic analysis. So strategic analysis would be taken up to understand the different aspects. So we will be studying that in detail about strategic analysis. After strategic analysis, we will be looking into the alternatives that are there, which can be implemented. So that is what has to be looked into. Analysis will help us to study the internal environment and the external environment. So there are different models which are helpful for us to understand. So how do we analyze the scenario? How do we look into that, investigating, inquire, all those things, understand that particular situation. So how do we do that? So to take up an analysis, we have different models and methods and studies which help us to understand things internally, externally in a better manner. So take up the strategic analysis. The choices are about, see, just now few minutes back I did explain to you that, see, there could be a gap between what is expected and what is uh, the basic desire that they have. So if at all, if there is a gap, so we will be discussing about the gap also. If at all, if there is a gap, how can this gap be closed? So to close the gap, there are certain choices that are available. There are certain alternatives available. So either one or more alternatives can be adopted, and it can be implemented. So strategic choices, selecting those alternatives from among the alternatives, selecting any one or few alternatives, adopt them, and then put them into action, strategy into action. So analyze that, analyze the internal, external environment, what best suits them. So from among the alternatives, choose one thing, strategic choice, and then see that the strategy is implemented. Why is this taken up? This is taken up to ensure that the organization's objectives can be achieved. So the mission has to be achieved, or overall, the overall objective of the organization, maybe the mission of the organization, if we very clearly put it, which can be ultimately achieved. Otherwise, also in short term, also there are short term objectives, goals, and tasks that have to be achieved. So to achieve those things, what are the choices that are available? Select them, implement them, and achieve that. So this um, triangle or this model is called as JSW approach. Okay, Johnson, Scholes, and Mittington. The concept of what is strategic drift. See, the concept what we were looking at is, see, this is the expectation. If this is the desire, if this line seems to be the desire what has to be achieved. Okay, then they also have to change according to that. But sometimes the change doesn't seem to happen at the same level. The strategic drift talks about changing according to the changes that are expected to happen. Okay, if they change along with that, fine, because they would be adopting themselves according to the situation. But if they do not change, then uh, it if they do not change, that can create some new problems. Sometimes as serious as that, they may become outdated, and they may also have to quit the market. So that is the danger which is present if they do not change according to the changes that take place in the environment. First one, first phase. See, first phase. See, as the time passes by, every organization changes. See, minimum. Uh, Maybe if they have performed in a particular manner, or they have operated at a capacity level, or they have sold some X number of units. Very precisely, let's take an example. If they have sold, let's say, 1 lakh units in the past last year, so would the same performance be expected? Because as the time passes by, they keep changing. Therefore, they may anticipate that they will be able to sell 5% more than what they have sold last year. Or if their performance was up to a mark in the last year, some percentage would be changed in the current year. So those things are called as incremental changes. It is all based on the time. As the time passes by, see, then there is some incremental change which is anticipated, which is expected. So changing according to the incremental changes is easy because it can be anticipated. It is, say, changing in that particular manner also seems quite logical, because they are accustomed to a particular level. The next period, little more than that. See, that is slow, steady, logical, incremental changes. That's phase number one. Okay, incremental changes. But sometimes we see that in the environment, the external environment, things change at faster pace, not at an incremental pace, but at a faster pace. Maybe we can attribute that to the changes in technology, because technology changes. So they also have to change according to those things. So we see that the change is expected to happen at a faster pace. If they do not adopt to that change, the gap increases. Okay, we see that at the second phase, phase two, the second phase, wherein because of certain changes, uh, on account of technology, on account of changes in the methodology, technology, and the techniques, newer techniques come into picture, etc. So change is at a faster pace. So in that case, if they do not change according to that, the competitors may overtake them. They may become outdated if they do not change according to that. Then we see phase three. Phase three is a situation where there are too many changes on account of many changes which overtake the environment. See, there were few years back across all government organizations in India, they adopted computerization. Until then, see, the work was done all manually. Manually, they used to record everything in the books of accounts or registers or manuals, etc. But then they went in for computerization. So that was a radical change. See, that was many employees in those organizations did not even know how to what is a computer about, how does it operate, etc. In such environment, when changes were brought about, they were drastic. So uh, it is the because at times it is the need of the hour that they also adopt those changes. So every organization across they they take up those changes. See, of late we don't see accounting being done manually. Nobody is writing those things in the books of account. But of course, we've learned to try to write in the books of account, the journal entry, ledger account, posting it into the trial balance, preparing financial statements. Manually, we know. So there were days where things were done manually, but now who's doing manually? Nobody's doing manually. So that is because of technology. Softwares are available. You just feed the entry, put the entry into the system. It will take care of the rest of it until the financial statements are prepared and tallying everything, every aspect of it. That was needed at point of time, so everybody adopted that. So that's a simple example. See, many organizations adopted automation, computerization, digitalization. So that was a stage where a lot of redesigning happened. The same work, how to do it in a completely different manner. So there was a gap, there was a change. See here between how things are changing and then how they have adopted themselves. So there is a gap here. So at that point of time, they cannot think about doing things in the conventional manner, but they have to embrace the change very quickly. See, if it is required, see when it is required that uh, things have to be automated, everybody has to go in for automation. If they are hesitant about that, then so they will be left behind. So that is third phase where things happen at a drastic pace. Changes happen at a drastic pace. Okay, fourth change is see, when they adopt those changes, when changes are adopted, then they can again come back to their, um, I mean, pick up that pace and then get back to the what is the required pace. Or maybe sometimes they might have already reached that saturation point beyond which there is no possibility. So it could be the next demise or decline phase, or they have accepted the transformational change. So that's the strategic grip. So what is required at different phases, it has to be adopted so that they can be on par with what is happening in that particular industry. Strategic grip. That's basic information about the